Paul Scott. I just thought I'd give you a short demonstration of what I typically look for on the stock reports when a company puts out some interesting news. So the stock I'm looking at today is TrackMate, which happens to put out an in line with market expectations trading update this morning. So as you can see, it's up 21%. What do I look at on the stock report? First of all, obviously you want to see what it's worth. So 33.2 million. Bear in mind that will be the previous night's close. So you need to manually increase it by 21%, which is about £7 million. So about 40 million market cap. I'll then have a quick look at the stock rank here. 47 is sort of slightly below middle, which ties in with my recollection of the company, because it's had a slightly difficult period over the last year, which you can see again here from the 12-month chart showing investor sentiment. That looks to me like a chart that's bottoming out. I'll probably just quickly click here, and you can see it peaked at £4. It's now down at a pound for reasons that I already know about. So a bit of a yo-yo stock, this one, but it looks to me like it might be starting to turn upwards. This box here is the main section I look at. So forward PE of 10.6 seems good value. If you hover over, it will give you the rankings within the sector and so on. 10.6 is clearly a good PE, apparently good PE. Note there's no dividend at the moment. That's not good. Price to tangible book is another key measure I like to look at. 10.6 means there's some asset backing, but not a huge amount. It'll be about £4 million asset backing. Look for non-applicables as well, because that can often be a sign that you need to look into that into a bit more detail. So this is suggesting there's no free cash flow, which is one of the criticisms of this company. I love the quality box here. Specifically for me, I like operating margin. I like an operating margin maybe 10% plus, which shows good pricing power. You've got return on equity, return on capital, which are not great there. I love to quickly skim this box. It's not just about 1 year's figures, it's about the trends. So you can just hover over and get these charts here. This is clearly a strongly growing company. Operating profits, something clearly went wrong in 2017. 31st March 2017 year end. I already know about that. The company's had well publicised problems, and net profit is obviously after tax. Important to remember. EPS normalised, again I look at in the trend. You can see a fall back there, but brokers are predicting an improvement. I then scroll down here. My favourite, this section here is fantastic. You can just glean in a few moments, a few seconds really, what the history of the company is like in recent years. I like the fact that it hasn't actually been loss-making. It's had some sort of setback, so the question is, will it recover? It's been valued very highly when investors were positive about it. The PE now is 10. If it now that's interesting. Look, you can see it did start paying dividends, but it stopped them, which again ties in, which you can see up here. A 2p maiden dividend was paid there, but then dropped because the company ran into problems. So, and here we can see broker forecasts have really dropped a lot in March 2017. So that's where you go to look for your news to see what went wrong in March. You can click on more here to see the RNSs, and there you've got you'll have a trading update in March, where things went wrong, and a capital raising here in March. There you are. It's probably, and then of course you can look up to see what Graham and I have written about the company and others. So this will pick up. We most recently reported on it today. I should remember that because I wrote it. So here we have my comments this morning about the trading update. Let's go back to the stock report. There are a couple of other features that I find really useful, which you may not necessarily be aware of. Under the accounts tab here, there's a directors' dealings list, which I find very useful. It's sometimes quite revealing when directors are buying or selling large amounts of stocks. Now here we've got some quite chunky sales. There's a lot to be said for following the money. I'm just looking at what directors are doing, but it's not a particularly reliable indicator. But I mean, here certainly you've got, mind you, actually they're quite small amounts, but quite big amounts of shares being purchased in the teens was a nice indicator. I remember trying to buy shares in it myself at around that price, and it was so illiquid you just couldn't get them. Now, under the accounts tab as well, I like to have a look at the trend of the financial statement. So here you've got a nice summary of the income statement, but over several years. And you can look at the trend of the various items. You can look at really the growth of the company from it being a very small company to being considerably more profitable here, but then obviously, as we know, the sharp downturn there. Quite detailed information. I also like looking at this line in particular, diluted weighted average shares. Now that gives you a good indication of whether this is a company that is doing repeated fundraisers and diluting existing holders, which it is, but I wouldn't say necessarily to an excessive amount there. That's not too bad for a smaller company. Then you've got obviously balance sheet. Whoops, there we are, balance sheet here. Again, balance sheets are only a snapshot on a particular day, so the numbers can move around quite a bit. So I like to look at how items like cash have progressed over time, how other items have grown. Debtors looks a little bit high to me there. It's surprising what jumps out at you from just reviewing the trend, the 5 or 6 year trend of these numbers. And you can do the same. For me, net current assets is a key number, so you just take current liabilities off current assets, which is up there, 13.4 less 7.5. That's a nice healthy position. I haven't got any problems with that. So I don't really have any concerns over the balance sheet here. And then cash flow, I think, is a greatly overlooked financial statement, actually, funnily enough. You often find things in here that are not so great, which are not evident from the P&L. And one of the main criticisms of TrackMate is that it capitalises a lot of stuff here, and it has a negative free cash flow, which I think there is some merit in that argument, although I think it's been overstated by bears. So always a good thing to look at the cash flow statement, I think. And then on the charts, obviously, you've got a very nice interactive charting package here. For me personally, I like the obvious events is quite a good one. Annual results, so you can just see where the annual results are, so that's handy. And let's pop on in interims as well. Often those are the things that move the share prices the most. Now the moving averages are there, that's it. Now most people use on a 50-day and the 50 days come up by default, and you can put in a 200. There we go, put that in, and then it's come up. They've come up by default, so I'm not sure if I think I might have set those personally. Or is that a standard thing?
They get their default ones.
Their default ones, fine. Well, those are the most widely used moving averages there, and you can see today it's actually, it broke through the 50-day moving average quite recently, and it's really smashed through the 200-day moving average today. So I'm not a chartist, but a lot of people might see that as a stock that's beginning to look interesting from a chart perspective as well. There's all sorts of other much more sophisticated things you can put on here. RSI and so on. It's very sophisticated. I'm probably reaching the end of my expertise on charting, so I'll leave it there.